Okay. Right. Bear with me a second. I'm just clicking on links and getting shit set up. And not that one. All right. Now, a slight divergence from the planned show in some regards. All right. So, first of all, if you remember, let me just make sure everyone's here first. All right. Can you hear me? Can you see me? And all right, good, groovy. All right, cool. Now, let me share my screen. If you remember last week, we had an oh shit moment with the ETFs and Bitcoin futures and all of the other things that may have opened up an entire door of opportunity. And we looked at Grayscale's Bitcoin ETF, and we were like, well, hold on a minute, because what if and everything else. Okay, so I looked into lots of other ETFs. Now, the thing is, a lot of ETFs are brand new. Okay, so they haven't experienced the growth, the historical growth, so to speak. And I'll give you an example of, for example, this is one that's matched to Ethereum. And it only started January 2024. And again, it's collapsed like a fucking fly in the cupboard. Now, if I just put this side by side, I'll show you the Ethereum. I'll go to 2024. So if I take, okay. Let me just hide this for a moment. So if we take July, is it July? Yeah, June 2025, okay, and mirror it to that, it's almost identical. Okay, it's almost identical in look, but the problem is, obviously, Ethereum, since that period, has taken a bit of a bloody hammering. While it's done well by jumping from, 2,300 up to here, and the projections, I'm going to say this with all candidness, for Ethereum is that it could be, with the extrapolated CAGR, which is, you've heard me mention a lot, compounded annual growth rate, it could well be $400,000 a coin in the future. But Ethereum's growth has not been as magnificent, shall we say, as Bitcoin and others. Now, that being said, the performance, okay, now I'll just pull this up just to show you it's mapped, because this is, $2,000 or $4,000 a coin, $2,000 a coin, and that's the standard. Here, we're at $1 a coin, it's 1,900. It's 1/100th of that. And again, here and everything else, it's up to $15 a coin. It is a much wider range comparatively. The issue is, well, the issue and the opportunity are that this is a very dirty chart, which tells me not a lot of people are fucking trading it, to be honest. However, if you look at it from a performance standpoint, we don't have enough growth on our back test, so to speak, as a proxy to say, okay, what have we got? Because right now, we would have, again, using extreme numbers. So I'm going to take off the extreme numbers and just keep it simple. We would be DCAing in during a down cycle with only a short amount of history. Okay. So in terms of this, from this period where it then dipped and dipped and dipped, right now it's losing. And you may be thinking, oh shit, this doesn't work. Oh shit, this sucks. And my initial reaction when I was going through this, I was looking at the Bitcoin, grayscale Bitcoin, and I'm like, holy shit, it's fucking awesome. Holy shit, we're onto something here. Now, looking at these ones in the initial phase, I'm like, well, shit, this sucks. What the fuck? Okay. But then I started getting into the numbers and realizing, okay, well, hold on. These are brand new. They have the liquidity. But right now, it's not growing from this stage because it's Ethereum. Okay. Ethereum has been hammered pretty hard. Now, that being said, well, what's Ethereum done over the long term? Well, it's worked out rather fucking well. But that's because it's gone through those growth spurts with a long track history. This is, again, going from 2025. This goes back all the way to 2017. So that's 8 years rather than 2. So in terms of this is the exciting thing for me. In terms of what I do see, we haven't had that period of growth for Ethereum, but when we saw it with the grayscale, okay, there's 2 very exciting things here. And I know I was going to talk about yield and all sorts of other stuff, but I think this conversation needs to happen. The ETF aspect of this can be extreme. You've got to ride through it. There's 2 really that have ETFs, Bitcoin and Ethereum. Now, there isn't a long-term Ethereum ETF that has been. And we can see here from July 2024, it's been very sideways and then down some. It hasn't gone through that really big, like from 2022. If they had opened that ETF in 2022 at the bottom of the market, we would be sitting very fucking pretty. But if I take this, and again, I can see, again, massive growth over time, but it's only up, total return 420% over that entire period, compared to, say, 1,000% with Bitcoin. And with Solana, it's 2,000%. Ethereum is actually the worst performing one of them all. However, if we go to this, and again, and this was my kind of aha moment, if you will. Okay, 2020. And I said June 9th. If I just restrict it, same results. It's a negative number. When I put those side by side, I'm like, okay, in the short term, Ethereum has not performed. It's not performed that well. So I have to change my mindset is, well, this is a short snippet of data. So if I assumed, and again, it is an assumption, that we are at the beginning of these, and things like, again, I'm not recommending ETHU. I was just looking at different ETFs that exist, but it's on the CBOE. If I look at these and I think, right, well, let's say that this is now at the beginning of this cycle. This is only a fucking dollar. It doesn't have to move much to be 100, 200% increase. So I'm very excited about this. My initial reaction was, well, why is the Grayscale Bitcoin one so much more magnificent than anything else? Made me think, made me think. I had to crunch and do a lot of research on this. But yeah, the conclusion is we have a fucking huge upper motherfucking tunity. Don't ask me to spell that. Because at the end of the day, the magnification factor with the ETF versions in a DCA network where these coins are or these contracts, these ETF shares are a fucking fraction of the overriding or matched aspect. And that's fucking crazy. So if I look at what was it? I'm trying to find the fucking. I can't remember the name of the BlackRock one. There is the mini trust one as well, which again, smaller, smaller, smaller. And this is brand new. It's the Bitcoin mini trust one. I'm just thinking about that. Again, small amount of data. I think that came out in August of 2024. Yeah, there we go. And again, you can see that one's gone the other way. It's profitable at the moment because it has grown from that point. This is a good comparison. It's fucking. Oh, yeah, excuse me. Can someone look it up just so I don't hold on, just look it up. Anyway, the point is, even with a lot of these new ones that are emerging, they are fractionalized. IBIT, that's it. IBIT. Okay, forgot what it was. I was like, yes, it's bit something or other. Bit. Okay. All of these are relatively new, which means small amounts of data. But I can the way I get around my initial risk score, or that's negative or what have you, is, well, hold on a fucking minute. Let me compare it to the original coin. And if my conviction rate, in other words, my conviction in the long-term growth of the underlying asset maintains the same, then these ETFs are going to be fucking huge. They have massive market share. They have massive market capitalization. They have massive companies behind them. Well, when you think about what BlackRock wants to do, is they've got and obviously hold a lot of these shares themselves in their own ETF that they're funding, underpinned by the value of Bitcoin. Is I'm not actually owning Bitcoin, but what I am holding is a contract for money pegged against Bitcoin. So, yeah, I'm going to add these as part of my portfolio. This is the important aspect. These can be a massive magnifier for everything we do. And I'm talking thousands of percent. I mean, if we take just what we saw with Grayscale, okay? And compare that, okay, let me just change the date so that we have historical. 1900, 1, 1. Okay, so cancel stocks. Okay, if we take that, GBTC, okay, and then compare that to BTC, same exact setup. Okay, we turn that back on. Fuck off. Thank you. Right. We have a risk score that is approximately, and if my math is right, 8 times that. The value difference, okay, I was looking at this, I'm like, hold on, why is the fucking numbers different? All right, this is starting off with $10,100 a month, okay? If I take this and I'll do it the same, $10,100 a month. That's 7,000% difference, but current value 138,000, which is still fucking good considering you've only got 18K in there to start with. Did I fuck up? Did I? Hold on. No, 10K, 10K. Oh, yeah, you're right. Okay, fuck off. Bollocks. Moving too fast. Even still. Okay. Still shows you just how much your initial capital does make a difference. But 309K versus 1.82 million. A significant, significant difference. So even with that, you've invested 27K, you turn it into $300,000 over 8 years. That's a great return on capital. However, $24,000 turned into 1.82 million in that same period of time is not insignificant. So if we have the opportunity to do that with GBTC and other Croxseed futures, we don't want to have more than one in our portfolio. We don't want to have overexposure in one single asset. So we would pick one for Bitcoin, pick one for Ethereum, and stay with that. Now, this is actually a good point from Scott here. New articles the past week about BlackRock buying Ethereum, and RWA's ETH has about 77% of that market. I'll have to go into that and confirm that. But yeah, BlackRock is buying up a lot of digital assets. And when you consider that, listen, they make a fuck ton of money from creating these derivatives. That's what these are, by the way, derivatives. We have a huge opportunity. Now, the other side of this And again, we've talked about automation, and I know we're going to talk about yield farming. Maybe we'll do that next week as we wrap things up in chaos. Because honestly, what we stumbled on last week changes this fucking entire thing, changes everything we were talking about. And it really knocked me for a bit of a loop. I'm like, I better fucking verify this before we go further. But here's the good thing. With this approach, this is where Alice comes in. Now, again, I'm going to give you a demo of this. Now, this is just a throwaway account we got here, and just experimenting, bug testing, and everything else. So, what this will do is this connects to Tasty Trade. And one of the things that we're adding in here, you can see down here, crypto coming soon. It is coming soon at the moment. But this connects directly to Tasty Trade. It will have all the DCA features, including rebalancing. Now, the goal was, hey, let's do DCA on crypto. That's what we're going to do. However, obviously, these ETFs are directly available through Tasty Trade or other stock brokers, of course, anything that is in the, trades the US equities markets. Yeah, you've got all of that right at your fingertips. That was, oh, you did a deep dive as well. Okay, so I'm assuming you came to similar conclusions to me, Dave, in that, yeah, there is a magnification of acquisition levels based on what we could put in fractionalized into crypto versus what we can do with these other ones as well. The magnification is going to be interesting. I'm understating it because these fucking comparative numbers here don't lie. These don't lie. These don't lie. It's the same base thing. Now, the only difference is how long has Bitcoin been available on Binance versus here. So you can see the investment numbers are slightly different. We've had less here versus here because of when the grayscale one was created. But yeah, there's a lot to this, and the bottom line is I'm going to switch my DCO over to this because of the magnification effect. And it just blew me away. When we stumbled on this, I'm like, well, fuck. So yes, there's a lot going on, and especially now that there's ETFs for Ethereum, it's almost, and I say this cautiously, it's almost making me discount anything other than growth, the core assets as these ETFs. Because the magnification factor, the volume, the risk mitigation of things like Solana, ADA, XRP, which are more volatile growth drivers, is kind of extreme. Now, before I go any further, does everything I say so far, everything I've said, make sense? Okay. Now, I'm just also doing this quick search. I want to see if anyone is talking about Solana ETFs. Okay, so the main ones, okay. There is, okay, Solana. Yeah, so there's exchange traded notes for Solana. We'll just see. And they're not quite ETFs, they're European um, derivative contracts and what have you. But yeah, not worth a fucking around. All right, so all right, so Pascal has. I didn't really understand what is the difference between the two and why grayscale is more interesting. Right, how can I explain? All right, so you have your main asset, okay, Bitcoin, which trades right now at $83,000. So when you have your $100, you're buying such a small percentage of that. However, when we go over to the ETF is an exchange traded fund. It's like it's a derivative of Bitcoin pegged against Bitcoin's price. But as you can see, it's only $65. So it trades in scale compared to Bitcoin. It's not exactly pegged against it because you can see that if it was fractionalized, it'd be like $82, but it's traded in comparison with the growth and everything else. So when you buy $100 over here and it goes up a few bucks quickly, your scale of growth is much higher than the scale percentage here. While it may be 1% here, it may be 5 or 10% over here. So if you look at the numbers, while it's pegged against the underlying asset, the growth over time has been much more. That's why we're excited about that. Hope that explains it a little bit better. Okay, this is why institutions are buying the Ethereum left and right, including, well, yeah, the current administration isn't buying it. Okay, I want to be clear. So the current administration is creating what's called a sovereign wealth fund. This is why I've been looking at, my top ones right now are Bitcoin, Ethereum, Solana, ADA, and XRP, but they're not buying. They are using seized assets and holding them as part of the sovereign wealth fund, which is basically an investment fund run by the government. And that's what's going on. But here's the thing: institutions are buying it, not only the underlying assets like MicroStrategy and ARK and everything else. One of the reasons they're doing that is the belief in the long-term growth and hedge against inflation, because Bitcoin is kind of like, they say digital gold, but in reality, it can be, and I choke on this, a store of wealth. I choke when I say that because every time I've heard that, ever since I've been trading and involved with crypto, I wanted to like smack someone when they said that. But it's evolved into that. But it's still a volatile asset. But yeah, these ETFs, and what I'll do is I'll put a list of the top 3 Bitcoin ETFs and the top 3 Ethereum ETFs for you to look at and refer to in the group later on as a resource. Okay. Oh, Trump's son buying it? Yes, yes. Yeah, I know. Barron? Okay, I'm not going to get political here, but Barron Trump is a very impressive young man. That guy is going to, I want to say, outshine his father. That kid has scary amounts of potential. He's got his finger more on the pulse than anything. A very impressive young man. I'm not getting into the politics of it, but very smart and unfucking afraid. And yeah, and boys going places. But yes, very much on a finger on the pulse when it certainly comes to digital assets as well. So yeah, in terms of this, we've probably just magnified 7 to 8 times our potential profits, which, when we're considering the long-term nature of everything we're talking about, fucking impressive. So yes, it changes the entire scope and dynamic of what we're doing. And here's the thing. One of the things I was going to talk about is if you hold long-term digital assets like Bitcoin and Ethereum, well, one of the ways you can also make money is by staking them. We'll talk about that, I think, next week. Okay, I'm going to change that, but that allows you to make an extra 5–10% per year, which mounts up when you're holding large assets. If you are, you can also stake stablecoin. So if you create a nest egg. But this entire discovery of this thing we did last week has derailed all of that because we don't need to. We can do it at this level. You can, there's ways to stake Solana, ADA, and XRP if they're in your list. And there are some, if you're in holding BNB, you can get, if you're in Binance, you can get a little extra paid, but that's 4 or 5%. I'm having to change things around because of this discovery. So one of the things I do want to talk about is scaling and how you scale up and down. So let me just pull this up here. Got my notes, so I just want to do this. All right, cool. And now let me pull up Photoshop and make sure it's not going to show something bad. Right. I mean, bad because I was doing some April Fool stuff earlier on just to wind people up. And some people get offended when I do that. So, yeah, someone's saying, ETFs, Ethereum ETF cannot include staking. No, if it's an ETF, there's no staking. It's only the hard underlying assets. So if you're doing, for example, Ethereum, Bitcoin, there are ways to stake more Ethereum. Bitcoin, it's a little trickier. And you have to then move your Bitcoin from over here to over here. And while it can be good, it can also be a pain in the ass. If you're holding Ethereum, you can actually loan out Ethereum. You can and get paid on that. You can also do the same with stable coins because you become a liquidity provider and you get compensated for that. You get a skim of the profits, which can be good. But it's a good thing to do, and you can call it yield farming and all the rest of it, and what have you. And if you have significant assets under management and you build that up over time, an extra 10 or 5 or 10% per year on $1 million or $10 million is good for doing fuck all, but it does require a little extra moving shit around. But yeah, so one thing I wanted to talk about is, and I'll just pull this back up. Why did it? No. My notes are fucking failing. Hold on. Come here. Fuck off. Right. So one thing I wanted to talk about is scaling. Scaling comes in line with confidence. The rule of thumb for me is I want to take 15 to 20% off my profits of everything I do and put it in. So if I have a good month, guess what? My contributions scale. Okay. So here's the thing. What's going on here? Hold on. Why is I'm like, no, fuck off. Right. So here's the thing. There can be a direct correlation between your own success in the markets and also confidence. So if you have a good month, you can scale up. If you have a bad month, you can scale down, and so on and so forth. Now, the problem is the markets, let's see, where's the colors here? Right, so I'll use blue for the markets. Now, the markets could be going up. Okay, you're meant to be blue, you bastard. Right. Markets could be going up when you're reducing contributions and you don't have a perfect sync. So what happens is, hey, maybe you're putting more in when you don't need to be. Okay. Remember, we talked about with the Rebel DCA system, it adjusts to the market conditions. So one thing you can do okay, is if you're using an underlying stable coin as an example, or you are using ETFs, contribute to a war chest. Now, I was going to try and draw a war chest, but now I've run out of bloody paper. I was going to draw it all nice. And, okay, fuck it. All right, so war chest. This was going to be a trunk lid. I am not an artist. I am trying very hard. It sucks. Okay. Going to be a war chest full of your coins. Okay. Now, this could be USDT or US dollar, whatever. Okay. So what I like to do is build up a war chest and then consider what my contributions can be. Because if I increase my contributions, then I want that to be consistent. So rather than just saying, oh, well, I've got 500 this month, well, maybe this month I've got 600. Oh, I could do 700. Oh, this month the markets are going down and I can only afford 300. But at this stage, I should be adding more because that's when shit's on a discount. You understand me so far? Do you understand what I'm saying there? Is if we just vary it directly inject into our contributions every month, and we're up and down with that, we're going to get that disparity between when we should be raising and when we should be lowering based on the strategy, right? Yes or no? Yes, yes or no? All right, cool. So what this allows you to do, or this approach, is instead of doing it that way, is add it to your war chest. So what happens is when you have more, well, your war chest is full, okay? And when you need to, markets are going down, well, you have more to add, and you're cool, and you can be consistent. But when you have maybe a little less in your pocket, or you're like, oh shit, all right, things are a little tighter than I wanted this month. All right, maybe I'll just put a little bit in the war chest. Well, you've still got a capacity in there to maintain when you're actually need to. So what you're doing is you're using your war chest as a buffer. Okay. So you can add in there, and if you've got extra, well, when it comes time to, to add more or it scales up, you're not having to come up with extra every month. You just take it out of your war chest. So this allows you to scale. And when your war chest gets really full or over full, and you're like, okay, now I can increase my average injection because now my war chest is at a capacity where I can take that and do it. So what happens is you're doing a linear scale of contributions as you can over time. So instead of just going with your contributions, you have a much smoother approach because it's your war chest funding it. Now, similarly, okay, we talked about rebalancing and everything else. That's fine. And we talked about scaling up and scaling that down last time. We actually did that in a lot of detail. But one thing I also want to talk about is taking profits. Because if we decide, okay, we're at a certain point in our growth, we want to take out money, put it in our pockets. But how do we do that without killing growth? Now, a couple of ways to do that, which I would say is a better, well, there's two approaches. Let me just do back to remove that. Okay. Now, two ways. Do you want to start taking regular profits or do you want to grow? So two ways. I'm a little short on money. It would be really good if I could take a couple of grand out. Maybe you take a little out your war chest to cover your ass, okay? If you build up a war chest, it's okay to take out, but make sure you put it back. So I would say the war chest is good for shortfall, okay? Now, again, you shouldn't be putting in money you can't afford to lose. Simple as that. I like to tax myself, and I use the word tax. I really wish I had a better way for it, but I don't want to see it. So I work with what I have, and I don't think about it. That's my rule of thumb, and that's how I've worked for years in a lot of this. That way, I don't think about it, and if I need more money, well, I've got all my other shit doing. Okay, that's fine. For me, my mindset is every dollar I take out my investments is $1,000 I lose in the future. And I hammer that into myself so I'm not tempted to rob from my future or my kids' future or what have you, because that's what I'm doing this for is kids and family and making sure everyone, is taken care of. But at the end of the day, when I've got a few million, rattling around, which again, obviously I do because I do all the shit I do. They get to the stage was, okay, that's enough. And this is the number. I talked about this at the very start, is everyone has their number. There's going to get to a point of growth where you're like, okay, that's it. And I can start extracting. And then it grows a little more and I can extract. And it grows a little more and I can extract. And it maintains, or I don't take out that much and it still grows up, but it just goes slower. Okay, that's fine. I can take out knowing I've got a good war chest in my investment portfolio. Now, again, what I'm doing right now with Singapore and everything else is very different than what I have with my venture cap or my private capital company, which is US based and everything else. It's very different, okay? So I'm creating a war chest over here and I have multiple war chests. That's good. That's good groovy. So what I'm setting up right now is to build into this. I know every dollar I take out is exponential money in the future. So I have to be very disciplined. And this is the one thing is you have to also consider for yourself is this is a long-term game. Investing is a long-term game, okay? And every dollar you put in is magnified exponentially. every dollar you remove prematurely from wherever your number is, 10 million, 20 million, whatever, even a million, even 500,000, whatever it is, doesn't matter. That's personal to you. Every dollar you take out before you get there, again, you're just putting that target date way out in the future, further and further out, because it's funnily enough, it's the growth from 1 to 10 years, slow until you start getting here. And then it's kind of at the 7-year mark that everything starts really taking off. And that everything up to that point is slow, and then it becomes exponential. So if you start taking out here, well, if you start taking out here, 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 and here, well, you're just putting that curve into the future, further and further and further away. When you sit down and you think about it, you're like, shit. Okay, so I try and always think, what can I do other than that? Now, if you have to, there's an emergency. I mean, like, just an, end of days emergency in your life and what have you, then sure, fine, fuck it. If you can avoid it, I always recommend don't steal from your future. Does that make sense? I know a lot of people a lot of people trade for income. They invest for life. And that is it's that long-term mental difference between trading and investing. Is you're building for that long-term future, you pay yourself later. It's delayed gratification. Yeah, try and tell that to my wife. Says Dave. Okay. Okay. Just before I shoot myself in the foot here. Okay. So a little secret. I can pull it up. Paying yourself is okay when you've got the capacity. And I'm trying to get something to load here, but it's not. Okay, fine. Oh no, now it loads. Okay, hold on. Now the other thing is I posted a lot of shit between here and there. Okay. So I met this guy randomly the other day. Okay. A couple of weeks ago, I was at the racetrack, met this guy. He builds motorbikes, custom motorbikes. I may or may not have just bought that motorbike you see there that just won a prize. Unfortunately, the girls did not come with it. But yeah, that bike has a 1500cc Toyota engine. It's a beautiful fucking bike. Just won Thailand's #1 custom built bike. Again, it's okay to pay yourself when you're at the level that you've got the capacity. But yeah, haven't done my goal yet. So I promised her, I'm even whispering so I don't get myself in the shit. I promised her I wouldn't buy a bike at the weekend if I go to the show, which I didn't. I waited until Monday. But I'm gonna be in so much trouble when that arrives. But there you go. Yeah, parking is a problem. Parking actually, I've made space, but it's because I keep two of my race track bikes in a van, one of my track bikes in my workshop, along with 2 others. So I actually have room. But yeah, that bike is fucking beast. But there you go. Anyway, I think that's a good point to wrap up right there. The ETF aspect is fucking huge now. Huge. And I am building that into Alice so that it can be done and ratified and adjusted. But yeah, the ETF, I was so excited to tell you about that. And yeah, that consumed me for almost 3 days of digging into that. But yeah, when will Alice be available? Okay, so Alice is in private beta right now. I am going to be opening up seats, but honestly, I've got a couple of bugs in there that's really driving me fucking crazy. I want to make sure those are ironed out first. Um, Very small things, but there's also one thing we're working on with Tasty Trade for what we call OAuth authorization. So when you connect up Alice to your Tasty Trade account, that's like boom, solid, and everything a lot smoother than the method we were using. So there's a couple of things. I mean, I've got hundreds of thousands of dollars into this now. Uh, and like I said, I originally built it for myself, but putting in this Rebel DCA approach and everything else, that's going to be very fucking cool, to say the least. Okay. When doing the tool, maybe a webhook, yeah. Not quite going to be the way it works, but it's a direct connect to Tasty Trade. That way it's direct API, no fucking around, all good reporting. Just to show you real quick, I mean, right now it's primarily doing our SPX trading, but again, placing orders, doing all the things it needs to do. It's doing our four candles approach. So first pulse, it was trying to adjust based on first pulse there. This is a small account we're just fucking around with right now and testing and breaking shit. Okay, bearish signal for afternoon pulse and place that. And this is one of the bugs we're having, which is unable to monitor. And that's something we're working on, and some other logging. And it's the logging side more than anything else right now. But yeah, so yeah, it does pretty fucking well. And then it'll give you performance. Ignore this because again, we're deliberately breaking the shit out of shit. So we're seeing negative this, yeah, that's because we're testing and breaking and testing and breaking and doing stuff. Tasty Trade in Canada, I know, dude. You're gonna have to create a US company and trade as an entity, which is actually pretty easy to do. I think as a Canadian, you can create an, okay, so not financial advice. You can create a US entity company. You can be a director in that company. You can then set up, once you have all your papers and your articles of incorporation, you can then create an entity account with Tasty Trade, which I highly recommend. And then you're good to go. Did Tasty Trade open? They were planning on it, and then the Canadian government fucked it all up for everyone. So no, it's still not available there. Yeah, Tasty Trade, yeah, the Canadian government is the pain in the ass there. But yes, for Canadians, you can create a US company, an entity, trade with that. You get serious tax advantages with that. You can also write off a lot of extra stuff, but you also mitigate your liability, and you can then create that to do dividends and withdrawals and everything else to mitigate taxes. There's all sorts of different things you can do, but again, I usually don't talk about that because, again, not financial advice, yada, yada, yada. You understand? But yeah, there are ways around it. Yeah. Yeah, there is a, okay, I'm going to say, Dave, if you're working on that with your stock market friends, make sure you're the only one in the company. If you're doing it, I've seen people go into partnerships and do things, and then that partnership dissolves, and then all the money gets risked and tied up in legal bullshit. Do it as yourself. If you're doing a company, do it as yourself. Okay. I can tell you some fucking horror stories. All right. particular suggestions of where to get advice that you align with? You mean in terms of setting up a company? I can make introductions. Let me talk to my CPA company and see if they can. I'll check the legalities and everything else. And then, yeah, they're pretty good at all of the above. But let me see if they can handle capacity. Okay, because they usually only work with private clients like myself. But I can ask and then we can see. And then I'll maybe mention that next week. All right, ladies and gentlemen, thank you for your time and attention as always. And then, yeah, we'll rock and roll from there. Thank you. Good night. See you next week.